Welcome to Daily Mortgage Rates Live with the Mortgage Calculator. We are going to go through some live mortgage rates here today, and then we will do a deep dive into today's topic. Thank you, everybody, for tuning in nice and early. Feel free to drop a comment there. We did put the chat up on the screen. So as you tune in, feel free to drop a comment there. We'll wait just a minute here to get started. We are streaming this live on YouTube, Facebook, and LinkedIn. So give us a moment to go live on all the different platforms. I see people tuning in early already and dropping comments there. Thank you, Ashley, Christina, Adam, Owen. Thank you for the comments. We'll get started here in just a moment. Hope everybody's having a good week so far. Thank you, Warren, for the comment. Anybody tuning in, feel free to drop comments there as we wait a couple minutes here to get started. And feel free to drop questions here as we go through today into our deep dive topic. If you have any questions, we would love to answer those as well. You can drop those in the chat. Dario, thank you for the comment. We'll get started here in just a moment. All right, it looks like we are live on all the different platforms, so we can go ahead and get it started here. Feel free to keep dropping comments there in the chat as you tune in. Drop any questions you have there as well. We can go ahead and get it started. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every morning is go through live actual mortgage rates. And then we do a deep dive into a different topic every day. Now, today's deep dive topic is not non-QM, but it's still a loan that we do here at the Mortgage Calculator, which is USDA Loans. So our sales manager, Jose Gonzalez, with 27 years of experience as a loan officer and a realtor, is going to do a deep dive into USDA loans here in a little bit. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go through some actual live mortgage rates. So Nick, let's go ahead and pull up the pricing tool and see what the market is looking like this morning.
All right. So this is our pricing tool, which will show us the general rates for today. It is August 10th, just after 11 a.m. Eastern. So all of our programs are live. This will show us the rates and the APR. If you'd like a full loan estimate with an itemized breakdown of all the costs that go into the APR, please get with our team members. We have over 300 loan officers in 24 states. So for today's demo, we will set up a loan amount of $400,000, a LTV of 80% loan to value, 20% down payment, as we do every day. We'll set the desired price to $99, which means we will ask the computer to find the best rate at one discount point in cost. And we will compare our conforming conventional programs with our FHA programs. And then we'll go into our expanded guidelines where we have over 5,000 additional loan programs that not many other banks or lenders have access to. We do not do the VA or USDA Live. VA is only for eligible active service members and veterans, and USDA is only for properties that are eligible. So if you do happen to be looking at one of those, let us know. So we'll start today with conforming conventional, purchase, 30-year fixed, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO of 760 and an estimated debt-to-income ratio of 40%. So with those settings, let's check the rates this morning. And exactly the same as it was yesterday. 7.125 rate, 0.875 discount points of cost, final APR 7.287. So if our customer doesn't qualify for conventional for any reason, typically the next option we will check out is an FHA program. FHA does allow a little more leniency on credit events and higher debt to income ratio, but everything else will stay exactly the same, so we can compare across the programs. So FHA went down a little bit here, which is good. 6.25 rate, 1 discount point in cost, final APR 6.842. So in this example, if our customer qualifies for conventional and FHA, FHA is quite a bit cheaper today. about a half a point in cost, total cost here on the APR. So definitely check that out. And for our customers that must use FHA for various reasons, this is definitely a good thing. The recent changes to the mortgage insurance are definitely welcome. Now, if our customer doesn't qualify for FHA, many other banks or lenders don't have any other loan programs, but fortunately, we have over 5,000 additional options under expanded guidelines, also known as non-QM, where we can use alternative income. So everything else will stay exactly the same, but now we have a new option for income verification. So full doc is what we use for conventional and FHA. That's 2 years of tax returns. So we will usually pick a non-QM option to take advantage of an alternative such as asset related, business bank statements, personal bank statements, RSU stated, VOE, 1099, P&L, no income, tons of different options. Our most popular by far for a primary home is going to be a 12-month personal bank statement option. And that's for our self-employed borrowers. When our self-employed borrowers submit 2 years of tax returns, they might have different write-offs and may not qualify at all, or may just not quite get enough income to get the home they really want. So in this case, we'll solve that problem for our borrowers with the non-QM loan program, simply using their last 12 bank statements, no tax returns involved at all, to determine a debt-to-income ratio of 40% in this example, just using their cash in the bank. So most of our self-employed borrowers will qualify for double, triple, or even more income, and therefore qualify where they don't qualify at all, or get the little bit of extra income they need to get the home they really want. So with these settings, let's check out the non-QM options this morning. So best option here at the top, 7.5 rate, 2 discount points of cost. It does cost a little bit more for these programs. Final APR of 7.6. So remember, conventional was 7.28, I believe. So we're right about within a little over a quarter point of the conventional rates using bank statements. So great option here for our borrowers that need it. And we have a ton of different options here. If we scroll down, tons of different variations of programs that use it. Some of these may also allow things like foreclosures and bankruptcy and other credit events. Obviously, that's why it might be a little bit higher rates. But please get with our team. They'll find which one of these dozens and dozens of options will fit best for you. Now, for our final demos, we always want to do some pricing for investment properties. So for the same exact scenario, 80% loan to value, 20% down payment, we want to check out our investor options. So we love to work with investors, whether they're a first-time investor or seasoned investor. We have some amazing options, and we'll simply compare the two product types here. We'll check out the conventional investment properties, and then we'll check out our non-QM expanded guidelines options. Remember, the government programs, FHA, VA, USDA, they are not eligible for investments. So we'll start with conforming. Everything else will stay the same as all our demos. The only thing we've edited here is the occupancy to an investment. So we can check out the adjustments that the conventional programs have for investment properties. Best option here at the top, 7.5 rate, 3.5 discount points and costs with the final APR of 7.75. So a good option here for our customer that may qualify for conventional, but most investors that do qualify still would like typically an option with a higher rate to reduce the discount points. 3.5 discount points is quite a lot of money in this case. That's $14,000. Our investors would rather spend elsewhere many times. So unfortunately, the computer doesn't find any lower cost options with conventional. That's why when our investors ask that question, we love to present our non-QM options. So for the final demo today, we'll set up the same scenario, and we will choose an expanded guideline non-QM option. So first thing we need to select for non-QM is our income. The income option that's the most popular for investment properties and our most popular loan by far is a DSCR option. And that's because it doesn't require any income from our borrower or any employment from our borrower. We simply use the estimated rental income from the property to determine a DSCR ratio. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, aka the property cash flows on a monthly basis, that's a ratio of 1.00 or higher. We even have options under 1.00 where the property doesn't quite cash flow on a monthly basis. For the demo, though, we always put 1.5 since that's the highest value. Therefore, we can see all the programs pop up. And the final thing we need to select is a prepayment penalty. 3 years is standard for these programs. There are options for no prepayment that will cost more and limit the loan programs. And there are options for 5 years as well, which will cost less but limit the loan programs. 3 years is most common, so that's what we select for our demo. So let's check out the DSCR rates. Best option here at the top, 8% rate, 0.85 discount points and costs. So we solved our problem for our investor there. And a final APR of 8.062. So our investor's happy here. They saved their tens of thousands of dollars in out-of-pocket costs here. The rate is a little higher, 8% rate, but typically investors, as long as the property cash flows, are happy with these scenarios. And the APR here, 8.062, is within right at a quarter point of conventional. So absolutely amazing to have a DSCR program within a quarter point of an actual conventional government sponsored program, right? So most investors, when they're presented side by side, I'd say 90%. And looking at these numbers today, I'd say probably 100% of investors that are presented with a DSCR with the rates today for conventional will choose a DSCR option for many reasons, mostly flexibility. You can do 1, 2, 5, 10 of these loans at a time. No employment, no income, so it doesn't matter. Cash out multiple properties, buy multiple properties, very flexible. We also have dozens of different options here, maybe a little higher rates. Some of these may allow bankruptcies, foreclosures, other things that would put us out of qualification. And some of these may allow things like short-term rental income, which would otherwise put us out of qualification. So tons of different options here. Please get with our team to find the best ones. Now, let's get into Jose's topic for today, which is something we don't often get into because it is a very specific type of loan. But today we'll go into some USDA examples. So first off, remember this is for primary only. This is obviously for a property that is USDA eligible. And there are quite a few other caveats here. USDA is a pretty niche program when it comes to the government programs as well. So Jose, I guess before we go into the examples, why don't you just talk a little bit about the nuances here of the program. It's a different type of underwriting, a whole different system. So it's definitely something that you need to be aware of and prepared for. But these programs are pretty amazing. Obviously, these government programs are made to foster home ownership for people who would otherwise not be able to, right? So USDA, just like FHA, just like VA, definitely fosters home ownership, has some unique tips and tricks. And when you do take advantage of it, everybody obviously knows the 100% LTV is obviously a huge advantage there. But there are some other advantages to these programs because the government definitely wants to help foster home ownership, especially under this program in rural areas, which obviously need a little bit of help typically, especially as we move into the future and rural becomes less and less popular overall. These programs become even more helpful for our borrowers that need them. So Jose, if you're ready, why don't we just talk a little bit in general, and then we'll pull up these quotes that you got.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Great to be with you here this morning. The main point to consider with our USDA, as Nick was mentioning, is the fact that they do allow rural properties to be purchased, right? That's one of the big issues that we have a lot of times when we're out there with some of our options is rural properties, right? Can we finance those? Is it going to be an issue? Are we going to have an issue with the distance between the comps, all the other components, acreage, too much acreage of the land compared to the structure that would throw you off? Well, rural is meant, will assist that, but the real mission of the USDA option is that it does serve our agricultural communities, right? Where you may have the income be a little bit lower and the credit to be a little bit lower as well. So they do take that into consideration in their guideline. Hence, you have less, you have lower credit score requirements, and you have higher DTI, and you have reduced MI also for the rural loans. So we always want to make sure that we take care of our agricultural communities. As you know, they're the ones that help feed us, right? So it now the one thing that is very important on those USDA loans is that the property does have to qualify. The property location has to qualify, and also USDA loans automated underwriting needs to occur in the GUS portal. So you have to make sure you have your USDA credentials for the GUS portal, because that's where you have to go to run your DU. Right, it's real important. You can't run it through the normal channels that we always run it. So you would need to get those credentials. Now, some of you may never do a USDA loan in your life. Like I don't think I've ever. I think I've done like one or two locally here in my local market. Outside of my local market, I've been able to do those. But some of you, that may be the majority of what you do. I've had team members that I've assisted with disclosing their files, that every loan that they brought to disclose was a USDA loan, right? So it's an amazing option, especially if it's in an area where that is more the norm. It would be pretty cool to be able to readily get your contracts accepted with 100% financing and with reduced MI. Now, the other thing I would note about USDA, it is for one unit properties only. They don't want house hackers using the USDA program to get their 2 to 4 unit properties, right? So one unit is all you get. But we do have some pretty interesting options that I'm going to share with you besides the usual regular purchase, right? We do have solutions that USDA provides for excuse me, for inventory shortages that you may be experiencing in some of your local markets, right? With the one-time close option, which will allow you to purchase the land and build the home with the same loan, not having to do a second closing to refinance you out of a construction loan. So, it's a very interesting program that lets you do that, but just the fact that it's also available at 100% LTV without a loan level price adjustment is an amazing tool. So, let me make this a little bit bigger here so you guys can see it out there. So our first option, is a standard 100% financing one unit purchase, right? So in this example, we're going with a $500,000 purchase price and a $500,000 loan. Now, one thing very interesting to note, obviously, our USDA borrower usually, maybe a little bit strapped for cash, right? That's why they're going with the USDA. It could be one of the reasons you're going for the USDA option. So you will note that USDA has such great pricing that we even have some pretty hefty lender credits there. So not only can your borrower get 100% financing, but you can also get a good chunk of their closing costs covered by a lender credit. You would really be the hero. So here we have 7.125% with a $3,500 lender credit plus 2 additional lender credit options. And then you can buy it all the way down to 6% for those borrowers having a little bit more money, or for the for those scenarios where you have lender credit. Where you have seller contribution. Just the opposite, where you're able to negotiate some seller contribution and maybe use that to buy down the rate. So 7.125 lowest cost option, 6% lowest rate option. Now our USDA one-time close is the option I was talking to you about. is an amazing product to combat inventory shortages in your market. Because in this case, you don't have to worry about finding the home, just finding the land and building the home of your dreams. So 7.25 is our lowest cost option, and they can buy it down to 5.75%. So that's pretty amazing. Just a little bit of a pricing adjustment compared to our regular USDA rate. You see there, 7.125 was $3,500 cost, and here's 7.125. Excuse me, that was lender credit, and here's 7.125 has a $1,875 cost. So about a 1.25 point swing on the cost of the rate when you use the one-time close option. Now, USDA also has a streamlined refinance option because USDA does not allow cash outs. Again, it is a restrictive program really to foster home ownership. So if you do have a USDA loan, you can refinance it to another USDA loan. As you will note there, no loan level price adjustments to go with the streamlined refinance option at 100%. But the catch is obviously no cash out, but you do not have to pay for an appraisal, nor are there income requirements if you're going USDA to USDA, as long as you're on your current with your payment and have not had late payments. That's a key. So really good option there. Now we have our renovation loan, which is another way to be able to combat certain situations going on in the market. Maybe you find what could be the dream home has some condition issues that may not allow it to close under regular circumstances. So here you can go with a renovation loan. Now it is a little bit of a higher interest rate and higher cost, but if you want to get that house that you can also finance the, for example, renovation of kitchen, bathrooms, maybe some flooring, maybe a new roof, maybe it needs windows, maybe it's vandalized, and that's the reason why it wouldn't be able to close on the regular loan. The renovation loan does offer the solution for that. And last but not least, a very interesting option, USDA with a repair escrow. So again, what do I mean by repair escrow? Well, here the property may have some minor items that are wrong with it, and they will allow you to escrow at closing for the repairs. So I wouldn't call it a renovation loan, but it's going to be a little bit similar in that it's going to be a controlled situation, in that they want to make sure that you're going to repair it. That's why it's a repair escrow. The money goes into escrow with them, and then it's released to complete the repairs. But you're not financing those repairs like with the renovation loan. It's either going to come from you from the borrower, or it's going to come from the seller in some form in the negotiation, but it is escrowed. So very good options here with USDA. And again, I remind you, all of these options are 100% financing with reduced MI and with reduced credit score requirements.
All right, great options there. I don't see any questions, but I will just reiterate, remember the first step is always to see if it's eligible, right? So you got to look up to see if the property is in a USDA eligible area. That's always the first step. But don't see any questions here, so I think we can go ahead and wrap it up. Of course, our loan officers all across the country, 350 loan officers, can help you navigate these programs. You can visit us at themortgagecalculator.com. We can pair you up with one of our loan officer consultants. Remember, we do this show 11 a.m. Eastern every single weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back tomorrow with another topic here for a deep dive. So thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we'll see everybody tomorrow, 11 a.m. Eastern, for the next episode of Daily Mortgage Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.